Give them a hand as they come on up. Thanks for coming out this afternoon. My name is Dennis Baker. I am the Business Program Director here at the Foundation. Thanks for those who are watching on the live stream. We're excited to have these fine ladies here to educate us about all things taxes. I want to have them introduce themselves, and then we'll jump in. So go ahead.
Hi, my name is Jordana Capra. I've been an actor since, let me preface this by saying I despise people who misuse the word literally. I've been an actor literally since before I was born. My mother was pregnant with me when she was on stage. So my whole life, obviously, has been walking this walk. We were talking in the green room about what our history with taxes is, and for the last 30 years, I've been really doing my own taxes. So I know that my tax guy took like 30 minutes after I gave him my beautifully laid out numbers and worksheets. I've been doing it professionally for 5 years. And if you had told me 6 years ago you'll be doing taxes and loving it, I'd be like, shut the front door. But I really love it. It's hand-holding, it's psychology, it's numbers, it's not black and white. It's fascinating. It's art. I think taxes are as much art as acting is. So there you go.
I agree. I'm Patti Lauren, and I just want to start by saying we are not your typical accountants with the wire rim glasses and the coffee stains on your shirt, and I hope that that helps welcome you to lessen your fear about this topic in general. So I'm Patti Lauren. I don't know if I said that or not, but I did, okay. I'll say it again. I've been a working actor for over 20 years, and I've been doing taxes for over half that, and I love empowering people about their money and their finances and taking ownership of it and just really feeling empowered because everything is everything.
Yeah. Mm-hmm. An informed taxpayer is an empowered taxpayer.
Nice. Knowledge is power. We always try to communicate that. So we're going to jump in. We have a list of things to talk about. We have some questions. We'll get some more questions, and we'll get going. So, Patti, I'm going to start with you. You brought this to my attention. There's a big misunderstood concept out there in the tax world. So let's talk about that. What is that?
The biggest mistake that I see people make is that they rush out and get an LLC. Whether that be, do you as well? Yeah. Whether that be to shoot their short film or as an actor. Quite often my clients will come to me, well, my agent or manager said that I should get an LLC. Well, chances are your agent or manager isn't a tax professional like we are. So before you go into any legally binding situation, you're gonna wanna be informed about what that entails. So put the brakes on, get an LLC. I recommend my clients, until you're making steadily at least $150 to $300 a year, okay? Don't do it. Don't do it. You're gonna have to pay a fee to California just to have that corporation behind your name.
$800 fee
exactly.
to California
even if you have no
every year.
income on it. It's still going to cost you. It's going to cost you an additional fee to have your corporation return prepared as well as your personal return. So slow your roll on that.
So maybe, and this is maybe something you can address, Jordana, is why are they being told to get an LLC, or why is that even part of the conversation?
Okay. Some people are advised to do it, especially if they're making their own film, because they think that, well, if somebody falls down, if you're making a film and somebody falls on your set, can they sue you? Well, no, not if you have an LLC. Guess what? If you have insurance, you're covered, and you should have insurance anyway. So, why are people being advised to do this? The other reason is, if you are indeed clearing at least $150,000 a year, every year, year after year, you reach something called alternative minimum tax, which sounds like, oh, cool, there's an alternative. No, there's no alternative. You basically lose the value of all of your deductions. So when you're incorporated, the corporation can indeed benefit from your deductions. But are you clearing $150,000 a year after year after year? If not, don't incorporate. Because, like Patti was saying, you not only have all of these fees, you have to pay somebody to incorporate. Plus, if you're doing it right, you now have to pay a bookkeeper to have all of your income is funneled into the corporation. Your bookkeeper now has to pay Social Security and Medicare. They have to pay you your own salary, pick a nice salary, $50,000 a year is what your personal salary is. That's what your personal taxes are now based on. To do good bookkeeping, that's going to cost you a few $1,000s a year. So it's just money flowing out that is really of zero benefit unless you're clearing how much? Thank you very much.
They're fast learners.
They listen.
Great. So LLC, check everyone. Good. Jordana, we're going to kick it off to you, and I'm sure, Pati, you'll have some of this too. Let's talk about, we're going to get through expenses, and all of them you can write off, but there's definitely ones you can't. So, and this was, Jordana was like, we're going to talk about this one. So let's start with the ones that are misconceptions, ones that people think they can write off.
Okay. The most frustrating one for most of us is the gym membership. Cannot write off your gym membership because an IRS auditor will go, have you seen Mike and Molly? They've never seen the inside of a gym. Okay. The reality is, if you're playing a cop or playing a criminal or playing somebody whose purse has been stolen, you may have to run for 72 takes. So yeah, it'd be super awesome if you were healthy enough to do that, and yes, your gym membership comes into play, but it is not a tax deduction unless you make your living, at least a portion of your living, in the health-based industry. So are you a Pilates teacher, a yoga teacher, a trainer, a stunt person? Great. But you have to be declaring that income to get your gym membership as a deduction. I keep a list of what I call deduction urban legends at my desk. And one of my favorites is, well, the IRS says you can deduct a pair of shoes every year. No, they do not. Another favorite is, well, I bought this outfit on set, so it's business, right? No, you can wear this on the street. The IRS actually calls it streetwear. If you can wear it on the street and it does not identify you to be in a particular industry, it is streetwear, it is not deductible. One of my clients does street dancing, b-boy dancing on Hollywood Boulevard. The Hollywood Chamber of Commerce requires those guys to wear, and I'm not kidding, hoodies, jeans, and sneakers. And he's like, well, they require me to wear this. I'm like, dude, you owned it already. It's not deductible. It is, hoodies, jeans, and sneakers are the definition of streetwear, right? Now, when you buy your scrubs and your lab coat, that's a deduction. If you buy a cop uniform or a gorilla costume, totally a deduction, not streetwear. Do you guys have questions about what's streetwear? Awesome.
Pati, anything to add to that?
We have many debates at my offices over certain things. I have one client, I saw rhinestones on her expenses, and I'm like, Chickie, what are you writing rhinestones off for? She's like, I have to put them on my she's a burlesque dancer, and she has to put them on her costume. I'm like, then we're writing those rhinestones off, and the glue that takes to put in like all of those expenses. So another top one that we debate on is formal wear.
Oh yeah, that's a big one.
The tuxes and the gowns, like, I mean, you can't show up on a red carpet with your yoga pants, right?
Right.
Well, we probably would actually look at us. But, so there are some gray areas and debatable. I think what it comes down to is, would it win in an audit?
Yeah. Now, as actors, you are more likely to win audits than civilians. I will give you an example. A client insisted on deducting all of her hair and makeup and nails, which, FYI, is not deductible. She insisted. I'm like, okay, you know what? I will just take my red Sharpie and draw a big red flag on the front of your return. It was a joke because we e-file. There are no Sharpies and no actual red flags being drawn. She got audited because her hair, makeup, and nails expense was exorbitant. She went into the audit, and she says, basically, I have a Maxwell House spot running, and I have a Snickers bar spot running, and I have a Sunny Delight spot running, and every time I go out on the street, people see me, and they spot me, and they say, you're the lady in the Sunny Delight commercial, and I have to look like this. She won her audit. So be prepared to pull out the Oscar-winning performance in your audit.
Wow.
That's if you go to an audit. I recommend having someone represent you. Because chances are you don't know what you're talking about, and someone else does. But how do you define the hair and makeup? Because when I do a Schedule A, I include a portion of it under job expenses.
Yeah.
Okay.
Yeah,
you do.
we make it nebulous
Right.
when possible.
Okay, yeah.
Absolutely.
If you haven't told, like this is where we get into specifics where you need to sit down with one person and go, how can we best finagle this? Because it is that gray area, and I think that's hugely important where it's not always black and white. Excellent, love it. Let's get through our list of expenses and let's talk about them, right? Because that's what everyone's here for, is how to write some stuff off. So let's talk about that vehicle mileage. We're in LA and we drive, $40,000 miles a year to auditions. Talk about that. Like, how do we, is it logbooks? How do we write that off?
It's up to you how you want to keep track. You're
But
also
keep track.
Well, I was going to say you can also estimate it. I mean, like pretty much we're all making the same rounds. We're all going to the same casting offices, the same studios. And I see a congruent line of numbers as far as what my clients have. So, and I think it's okay to estimate it. If you want to keep it, I know there's an app where you swipe business personal. I don't know what it's called. But
There's a few apps.
Yeah,
I've
so
tried
check those
them.
out.
I don't love them.
Yeah, I still like the notebook and the pen and the trip meter on the car.
So here's where Patty and I differ a little bit, because I have a real big fat stick up my ass when it comes to auto mileage. Of all of my clients, I was wondering, who's going to be the first one of my clients to get audited? This guy. And I'll tell you, my mileage log was a huge part of my winning that audit, because I put the date, I put where I'm going, 200 South La Brea, Kellogg's audition. I put the starting mileage, the ending mileage, the total mileage for that trip. Then there's a box where I can put if it's medical or charity, because those get put into your tax return in separate places. They have to be totaled separately. And then a column for parking. I don't care if you put 50 cents in a parking meter or pay $8 to a parking instructor, it's deductible. So I have this gorgeously laid out mileage log. Now, push comes to shove, if you have not kept a mileage log and you get audited, you could go back through all of your auditions because you keep track of them in your email, right? In your calendar. And you now have these resources to go, okay, well, this is where I live, and this is where 200 South La Brea is, this is the round trip, this is how many trips I made. You can recreate a mileage log, but the IRS has a word for writing something in the moment or on the day. They call it, well, the word is contemporaneous writing. So when you fill in your mileage log day to day to day to day, it has more impact than when you've sat down and created a mileage log because you're being audited. Same thing with business meals. It takes no time at all to write Jordana, taxes, at the top of that receipt for coffee, right? It's now a business deduction because you sat down with a person who has a name, and the point of sitting down was to discuss something related to your business. That's what makes it a deduction. So just saving your receipts isn't a deduction. You have to make a note on those business meal deductions. And yes, if you see a pretty girl in a bar and you want to buy her a drink, you'd better go up to her and say, hey, I bet you're a model. Who's your agent? Can I buy you a drink? Boom,
Write it
business
off.
deduction. Get her name, put it on the receipt, okay?
I'm going to write that one down. No,
Hey, I see a ring on your hand.
thank you. That was the joke. So it being the day before October, and I'm guessing many people have not written down their mileage yet, but have their auditions and their calendar and all that kind of stuff. Is it sufficient enough until they make that system work for them to go, okay, it was an 80-mile round trip, here's the date, here's the reason why. Is that better than nothing?
Absolutely, it's better than nothing. And here's why it's important, I think, to do it on a daily basis. As opposed to estimating, I live in Santa Clarita. Who else lives in Santa Clarita? No. Okay, you probably drove a shorter distance to get here, unless you live in Long Beach or some other faraway place. So the amount of miles you drive to 200 South La Brea are going to be different than the amount of miles I drive to 200 South La Brea. Now, do you do theater in San Diego? Do you drive to San Diego to audition? I sure as hell don't. So you might have more mileage than me. But the clients who come in and say, God, I have 30,000 business miles. I'm like, what, did you drive to New York to audition 5 times? So yeah, track your mileage. And absolutely, starting today, going back over your year, creating a mileage log is smart.
Right.
It is.
Real question. Can we take real questions?
Let's hold that. Let's get through some stuff and we'll get back to
make
it.
a mental note.
Erica's got a card right there and you can write it down. So we'll get back to some of this if you have direct questions. Let's talk about home office because this one gets a little sticky as well. Home office, define that for them, and then why is it a little sticky and how can we best make that work?
I always recommend to not take it unless you absolutely need it. And if I'm going to take it, I'll take it on the Schedule C versus the Schedule A, and we'll get into a little bit of that as well, because I think that's an important topic. It's something that is paid attention to by the IRS. So if you don't need it and it's not used, that area is not used exclusively for business. I know of one example we discussed in the office about someone went through an audit and they took pictures to send in to the auditor, and the IRS guy saw a dog bowl in the room. Do you know that story too? We all know that story. Yes, I've probably learned it from Mike. And so they disallowed the home office because the dog came in there to eat. So no joke on the exclusivity of home office.
Nope.
But the dog's not a dependent, which is a whole nother topic. So,
And the dog's not helping you with your business.
right, yeah, the dog is not, unless you
it's
are
an actor dog.
Right, if you are a trainer,
Okay,
a dog
yes.
wrangler, and that dog is one of your star dogs, then I'm willing to make that argument. But come on, this guy's dog was not part of his business. So home office. In fact, the same client who wanted to deduct his hoodie, jeans, and sneakers lives in a studio apartment. He has a futon bed, which is his couch. He just sleeps on his couch. And the whole rest of the room is the space where he practices his dance. So surely that counts as a rental studio space. No, it does not, because it's a studio freaking apartment. If the IRS looks at, you have a $600 square foot home and 500 of those feet are your office, they're going to be like, wow, this is an audit waiting to happen. You really need to have a house. You need to have a room that is dedicated to being your office. So it can have a desk or 2 desks. It can have filing cabinets. It can have bookshelves. It can have computers. And it can have nothing else. Unless you do voiceover, it can have your voiceover booth.
I do write off people's, if they have the studio apartment and they have like their closet that they've turned into a booth, that I write off.
And it's the closet. It's, 2 feet by 3 feet. It's a teeny tiny office, but it's a legitimate write-off. The IRS likes you to have a standalone space. So if you've turned your garage into a studio where you do practice your dance or do your voiceover, or maybe you meet clients because you do massage therapy. So a standalone space is ideal. A space, again, that is absolutely 100% used for whatever your business is, and you're reporting that income. And ideally, you see clients there. Those are the requirements of the IRS. Now, obviously, if you have a voiceover booth, you're not seeing clients there. You're doing the work and sending it out. I had this argument with my boss. He said, well, you can always go to Kinko's and download your sides or print up your sides. And I'm like, okay, so I go to Kinko's, I print up my sides, and I rehearse my scene out loud in Kinko's?
And you write off your business mileage going to Kinko's.
You could, for as long as they let you work there. So yeah, so if you have truly legitimately a space that is dedicated to where you work, awesome, home office. But don't cheat it, because if you don't need it, it can be a red flaggy thing.
Since you mentioned it, Patty, and it sounds like you guys already talk about this, let's talk about that difference between Schedule A and Schedule C, because we had a question about it anyways. So what's the difference?
Well, I started doing taxes in South Florida, where most of the work is non-union, and I realized that most of my actor and model friends didn't know to take deductions against their Schedule C income. So that's where I was like, wow, I need to help y'all get some more money back. Keep your if you don't, I prefer when my clients keep their expenses for their Schedule C income separate from their Schedule A income, which is W-2 income. If you don't, then I ratio it out. Is that how you do it?
Yeah.
Yeah. Yeah, we'll do the math on that, but it's going to cost you. Because if you're a SAG working actor, your income is on W-2, but you may do print work, which is a 1099, or you may be a yoga instructor or some other vocation which you are paid on 1099. So keep those expenses separate. Oh, and the minimum. You need to meet, I usually tell my clients, unless you have at least $6,000 in expenses against your W-2 income, no need to, because you have to meet the minimum for the itemized deduction.
Great. We're going to parse out some of these expenses. Some of these might be short. Anything we need to know about office expenses? Because maybe we do have that home office, but do we use that computer for personal stuff, or is it strictly business? Gets a little complicated.
A percentage.
Percentages.
Most of us in LA, it's usually like at least 75%. Like I'm dealing with acting stuff more than I am, emailing my mother, but she's passed, so I'm not emailing her at all. But yeah, that's a joke.
But we all have to buy printer paper. We have to buy printer ink cartridges. So yes, on rare occasion, I will actually print up an actual birthday card for an actual friend. I don't have many, so it's not an issue often. Awesome. But yeah, most of the stuff I print up are going to be sides. Or I print up my own headshots now because nobody looks at them, right? So yeah, so if you can think about how much of your printing, for example, is business related and how much isn't. Bring that number into your tax session. What else do you use? I mean, what do you use your computer for? I buy shoes. I buy a lot of stuff on Amazon. I'm an Amazon junkie. But I do spend most of my time looking at, and your computer, by the way, your computer is your laptop, your desktop, and your smartphone. It is a little computer in your pocket, right? We all do self-submissions. If you don't, you're an idiot, and you should start now. Because if your agent gets 10%, so how much work should you be doing for your career? Let's see, 90%.
They know math.
That's awesome. So do your self-submissions. And you can utilize all three of those tools, like iPads, I guess. Can you self-submit on iPads? I don't have one. I don't know. Okay, awesome. There you go. So how much of the time spent on those tools is business related? How much is personal related? Do not ever tell me 100% or I will roll my eyes and make you put $1 in the jar on my desk that goes to the American Cancer Society. That's my BS jar. I don't know if I answered that question.
Well, and then so the question, because percentages come up a lot when we talk about like internet charges and then like all that kind of stuff. So talk a little bit about, do you take a couple months, kind of figure out the percentage-wise there, and just then multiply it by 6? What's your best recommendation for figuring out percentages?
I use my crystal ball.
Okay, excellent, perfect, thank you.
I mean, you guys have a sense, right? Is most of your business done on your computer or your cell phone? Is it like half of its use on your? Is half of your use of your cell phone business? Is half talking to your honey or your kid? You know what it is. Give your tax preparer a realistic percentage.
Great. Couple things. Commissions and fees with agents and managers. Those are obviously write-offs. Is there anything we need to know? Being mindful about that. Just keeping track, having those exact numbers, receipts, all those kind of things.
Well, we usually know it's 10% of your W-2 income. If you have a manager, it may be another 10 or 15, depending on your deal. Just keep track of it. Know what you've paid them. Keep track of everything coming in and everything going out and who it's going out to.
Great.
And you can always ask your agent or manager, in January, give me a printout of what commission I paid you guys this year. A, it reminds them that you paid them and don't they love you, and B, it gives you a real specific number to give your tax preparer.
And this is something also probably for our UK members that are going to be interested in out-of-town travel. Things to be mindful, things that people maybe get a little tricky on with that kind of stuff. What's the do's and don'ts with out-of-town travel?
I like the business meals thing for if you're traveling out of town. If you're not receiving a per diem, IRS sets a rate for each city that you're in. So I always want a list of the cities that you're in for business and the number of days that you were in each. And then it's halved for like your travel days, and then it's a full, like New York, Dallas, LA, $71 a day. When I'm traveling, I'm usually like being careful of what I eat, since most places in the country the food isn't as good as here. So I'm eating bananas and tuna fish. So I'm not spending really $71 a day on food. Well, IRS is going to give you a $71 a day per diem, which then of course gets halved because all business meal expenses are cut in half. But it's still like, so keep track of the number of days that you're in each city for business.
And be honest, if you went to New York to meet with an agent and audition for a show, and then the next 5 days you just hung out with friends, okay, so take your business deductions for the 2 days that you actually had business to do on that trip. Because if you do get audited and you can say to an auditor, here's the total expense of my trip, this is the amount I put into my tax return because only these 2 days of that New York trip were business related, the auditor's going to go, oh, cool, okay, you're honest. I'm liking how your brain is working.
You're going to want to leave yourself a little room. Because then you have some leverage to argue your audit with. And audits, they do happen. Don't be afraid of them, but they do happen. And
Audit just means examination.
Yeah.
They just want to look at something.
so be cognizant of that.
As we're talking about travel, let's talk a little about moving, because sometimes actors have to move for jobs. They're doing a show outside country. So one big rule, it has to be greater than 50 miles to write off. And then what can you write off about a move? What can't you write off?
Okay, so you do have to move more than 50 miles to be closer to your workplace. So if you live in Los Angeles and you move to Palmdale because you got a giant house there, you're not actually moving closer to Hollywood. That's not deductible. But if you move from another state here, if you move from San Diego to LA to pursue your acting career, absolutely, that move is deductible. So what can you deduct? The cost of the moving truck, if you hired a moving company. If you had to stay overnight somewhere, that lodging is deductible. Your travel expense, but not your meals, because the IRS says, well, you'd have eaten that day whether you were moving or not. So no, meals while you're moving are not deductible.
And it has to be already in your established profession. If you were a doctor in Florida and you came to LA to be an actor, not allowed. If you were an actor in Florida and you came to LA to act, then yes.
So there's the obvious ones, like advertising, postcards, business gift, classes and stuff. Even in the obvious ones, people seem to forget some things or try to finagle some things. Kind of talk a little bit about, okay, it's the obvious actor things, but is there still things to keep in mind in those obvious ones? Okay,
let's talk about business gifts. The IRS allows you $25 per person per year, which would be awesome if we lived in the 1950s. So, let's say you buy your agency a $100 gift basket. You don't put Doug Ely on the receipt, you put AKA Talent on the receipt, because there's more than 4 people at AKA Talent. So now your whole $100 investment is a legitimate tax deduction. But be careful with what kind of gift you give. One of my clients gave her agent a Burke Williams massage card and put it to the whole agency. That's creepy, right?
Or fun.
So, depending on the crowd, I guess. So, buy something as a thank you gift that the whole office can share. And same thing with the casting office. Now remember, casting directors get paid to cast you. So giving them a gift is not a requirement, but if you choose to, make it something that the whole office can utilize. So this is my trick. I'll be like, hey, Kathy Carlton, I don't really know places to eat in Santa Monica, and I have some friends meeting me out here for lunch. Where do you guys like to eat? Booyah. That's where they get a gift card to have lunch for the whole office.
What gifts do you like? I like chocolate. When my clients bring me chocolate, we're good.
Bourbon.
Excellent. We're going to filter in some of your guys' questions here because I think they pertain. Matt Griffin asked, love it, consolidating one account to separate checking accounts, talk about business versus personal accounts.
Keeping track of expenses, of course, is a personal choice. I still do it old school with my paper receipts and file folders. There are apps, there are QuickBooks, which I'm not a fan of, but there's different bookkeeping systems. But the best way I found is to get one credit card that you use only for business. And at the end of the year, they give you that little pie chart with all the different colors. That's a great way to organize your expenses.
And if you use that one credit card exclusively for business, bless you. And I mean, you do not buy one bag of dog food for your dog that is not a performing dog. You do not buy anything that is not specifically and strictly related to your business. Then even the fees become tax deductible on that credit card, because otherwise credit card fees are not tax deductible.
Nor is interest. Right. But you shouldn't be paying interest anyway, and we can talk more about that. You want to receive interest, not pay interest.
Here's one that we're talking about expenses. Plastic surgery, facials, are those?
Do you want to go with the stripper boob example that we all know? Go ahead.
So, a stripper had little boobies, and she implanted gigantic boobies. And needless to say, her tips went up, her private dances went up, her lap dance, whatever all the options are that one has when one hires a pole dancing stripper professional. So she got audited on her boob job as a business expense. So she goes into the audit with photos of her before, and then she does this. Who would you tip? She won her audit. However, unless you get a straight male as your auditor, I wouldn't count on that as, an audit technique.
Let's talk about research. Research can be that kind of gray area, because you have you have your Netflix account, but how much of it is personal and how much of it is business? So let's maybe start off, Patti, with that research.
Same with movies. I don't really go to many movies unless I'm kind of in them. And then it's debatable whether it's a real movie or not. Joke, once again. I do a lot of indie films, so, a lot of them are a little sketchy.
Porn is real.
I just like making fun of myself. But if I do go see a movie, it's usually because I have an audition with that director, or I'm working with someone that's in that cast, and I want to see their performance, what's going on, and I'll be taking notes and have I'll sit in the back with my little notepad and everything. And most people, when they go to the movies, they're not taking notes. They're eating their popcorn. They're hanging out, enjoying the film. I don't really care what the story is. I'm there to get the information that I'm there to seek.
Yeah, so obviously civilians, meaning non-actors, cannot deduct any of their entertainment. So the fact that we get to deduct even a portion of our entertainment is pretty awesome. It kind of makes up for that no gym membership thing. So don't abuse the gift that the IRS gives performers. So if you go to see a friend in a play, sure, we can call that a tax deduction. You're supporting a friend's work and hopefully learning something about their work, and if you ever work with them, you now know something about working with them. If you are going to be shooting with a particular director and you want to sound well versed on their last hit, then yes, rent that film. Know what you're talking about when you're working with people, but don't abuse it. And same thing with TV. Yes, your cable TV is, to a certain extent, a deduction, but really, shows on cute kittens, probably not so much for business, right? So be honest. Be very honest with the percentage that you give your tax preparer.
I also have a client who was writing a script about online dating, so he joined various online dating sites and set up fake profiles, so be careful if you're on them. And that's research, absolutely.
This is a random question, but we're going to throw it in here. It's asked all the time, how long should we keep our returns?
You mean your returns or
yes,
your
return? Once you've submitted everything, and then I want you to follow up and all the stuff you're supposed to keep anyways.
Okay.
Yeah,
well, your return is your actual tax return that gets sent into the IRS. Sometimes language is, sometimes people, when am I getting my tax return? They mean their refund, but they say the return. So learn what what's what, you know?
Use your grown-up words.
But I'm a fan of keeping the receipts and your information like 5 to 7 years. What do you think? Yeah.
Keep your actual returns forever. And your W-2s and your 1099s. Definitely your W-2s. Keep those forever. Why? Because when you go to retire and the Social Security office says, hey, congratulations, you're getting $32 a month, and you're like, oh, hell no, something's wrong. You can now bring in your tax returns and all of your W-2s to show how much was taken out to Social Security. Seriously, keep your tax returns and your W-2s forever. But that gigantic wad, I wish I'd brought my gigantic wad to show you how much I keep.
I'm a record whore as well.
Yeah, thank you. Keep those. Here's the IRS rule when it comes to audits. I know I keep harping on audits, but it's the one thing that everybody lives in fear of. They can go back 3 years prior to the current tax year to randomly audit you. So the current tax year, now that we're past April 15th, is 2015. So they can go back 2014, 2013, 2012 to just go, ping, you're audited. So you need to keep your tax information for at least that. But who's going to remember that weird rule 3 years prior to the current tax year? Nobody's going, unless you do taxes, that's not ever going to be in your head. So 5 years is a nice, easy, round number. Because I am a receipt whore, I keep everything for 10 years. Because it's easier to remember, and I just feel really safe. And here's the thing. Let's say they go back randomly 3 years prior to the current tax year, and they find that you put down 30,000 business miles. Guess what? They can go back and back and back. And if they find repeated abuse of any category of deductions, they can keep going back. So that's why I like to keep things for 10 years. That's just my OCD. I think it should be OCO, obsessive compulsive order.
There we go. I like
Okay,
that.
thank
Yes,
you.
I agree.
I'm just saying.
So then on that note, if they can go back however long they want, does it behoove an actor to maybe, if they hadn't got the personal training and kind of did it on their own, to maybe go back a couple years and work with somebody to go, let's clean up 3 years instead of just this year? Is that something that might be smarter, and is that too much work? No?
I don't really think so.
No.
Let's keep moving forward with our
Great,
lives.
perfect. I didn't want to give them more work if they didn't have
Good
it, but
question.
I wanted to ask. Let's talk a little bit about the Los Angeles business tax license. I know.
Yeah.
And the main reason I ask is because it's confusing, and
It's
a lot
bullshit.
of people. And
Thank you.
Yes.
Okay.
But they
Apologies
need to
if I've
know.
offended anybody's sensibilities, but the Los Angeles business tax is not a tax. It is a bullshit license fee. But they call it a tax to scare you into paying it. Here are the rules regarding that. First of all, you have to have an address in the city of Los Angeles. And if you Google, I'm not kidding, Google map of the city of Los Angeles. It goes way north of the city, and then there's this weird little alley that goes all the way down to San Pedro. San freaking Pedro.
I know, I live there.
Okay? So if you have an address anywhere within the city of Los Angeles, and by the way, there are weird holes like West Hollywood is not in the city of Los Angeles.
Or Beverly Hills, Santa Monica, Burbank.
And you have 1099 income, meaning non-taxed income. Then this gets put on your state return. The state tells the city sends you a scary letter. Of course, way after the fact, so that you now not only have to pay the bullshit fee, but a late fee. So, how do you get around this? Well, if you earn less than $100,000 in your non-taxed income, you qualify for the small business exemption. If you earn less than $300,000 specifically in entertainment, you qualify for the creative activities exemption. Now, wouldn't it be a lovely problem to have earned more than $300,000 doing print work or whatever non-taxed work? Yeah, that'd be a super awesome problem, and if that were the case, I'd be happy to pay their bullshit fee. Except I live in Santa Clarita. It's not in the city of LA. But you will get these scary letters. The thing, you cannot call them. They will not answer. You cannot go online. They will not respond. You have to go into a local office. Again, doing the, I didn't know, if you could please, just this once, I promise next year. So, act your way through this and ask them if they could please this one time not fine you, not make you pay this fee because you didn't know, and next year, by the end of February, you promise you'll file your exemptive paperwork. And that you can do online. That's pretty easy.
And you get the little, then you get the little green card that reminds you.
Yeah,
of the
you
whole
get
thing.
an actual placard from the city of Los Angeles that looks super official.
There was a Hollywood office that was very actor friendly, and now I've found that Van Nuys is working well with my people.
Oh, nice. Good.
Head to Van Nuys. Great. I got a couple more questions here. That took care of that one. Actually, as I do these questions, let's talk about that 1099 W-2s. What are things people need to know, understand? You talked kind of about the Schedule A, Schedule C. Anything else we need to know about the differences and what to keep a track for and stuff like that?
I think it just has to do with what expenses did you have for that particular income. Just keep that separate. If you're a working actor, W-2 actor, SAG-AFTRA, or SAG-AFTRA, then you're going to have your one set of expenses and your mileage, et cetera, the tools that you need to do that work. And then if you're a print artist that you earn, or print model, whatever, that you earn your 1099 income, you're going to have a separate set. So keep them separate is a great way to do it.
And then what happens if you're an actor and you do have W-2 income and also 1099 income? How do you?
Well, that's.
And then you just got to
just keep it
parse
separate
them out,
if
keep
you
them
can.
separate,
Yeah.
and you just got to percentage it, the whole thing. Great. Someone had a question about what is the property owners? Is there anything else that they need to know that's different than anything? Does that have anything to do with their write-offs as an actor?
Well, as a property owner, you get to deduct your mortgage interest and your property tax, which is super awesome. Because as a renter, you get squat. Well, you might, if your income is low enough, qualify for a renter's credit on the state side of your return. But if you can at all swing it, being a property owner is an awesome tax benefit.
Great. you can, if you have another perspective, Patty, that's
Just, it
okay.
just depends on your total situation. I mean, I have people that can just barely afford to get into something, and I mean, you got to figure out what's best for you. Yes, it is a wonderful deduction, but make sure it's the right situation for you to own property before you. Once again, another thing you don't want to rush into.
Totally. Manny online, he emailed this in. What does it change if you file married jointly? Is there anything that you need to be aware of with expenses or anything?
This is another one. What is your legal marital status on December 31st of that tax year? What is it? There is a black and white answer to that. And if you are legally married, married filing jointly is the best way to go. A lot of people think that they can do married filing separate. That doesn't mean single. There's a whole nother set of situations that go with married filing separate. Married filing jointly, you're going to get the best benefit.
It is the most advantageous tax status.
If you can get together, if you're splitting up with your spouse and you can kind of agree to do like one final return together and like figure it out, do it.
One final send-off.
Because
your
if you are
taxes.
married filing single, you have to know,
Separate.
did your, thank you, married filing separate, you have to know, did your other
Soon-to-be
part,
ex.
did they itemize or not? Because you both have to itemize or you both have to not itemize. You have to know their social security number. There's a lot of information you have to have about that other spouse to do married filing separate. So it can be a bit of a headache, and it's not a tax advantage. It's not the best status for you.
And whoever files first, whether they itemize or don't, the other spouse has to follow through.
Now, if you have kids, you can, don't. It's so funny we're in agreement on that one. But if you have kids and you're separating and you're ultimately divorcing, you can go back and forth. Or maybe, you take the boy, your wife takes the girl, whatever. You can figure out how to do it. Or if you have one child, you take the kid this year, she takes the kid next year. You take the kid in even years, she takes the kid in odd years. There's all sorts of ways to make that work, but it's an agreement between you.
I found that quite often it's in the divorce decree, and I will ask to see it because this is another area where people just want to do what they feel is correct, and even though it may be correct in your heart, it's not going to be correct on paper.
Let's talk about the Affordable Care Act, because that's new, and that's something that we have to, that if anything, the actors just need to know this is something that has to be talked about in taxes and figured out. And so I know that's still new and not everything's been out about that, but what can you share about it? Or what do they be mindful of?
If you're involved in Obamacare, you will receive a 1095A. A lot of them were sent out incorrectly this year, and we had to do a lot of extra paperwork for people. Make sure you bring that in. If you have health insurance outside of Obamacare, let us know that. Bring in your card. Let's make sure you're insured. And if not, there's a fine, which quite often in my client situations, I've noticed that the fine was less than they would have paid for insurance.
Yeah.
So that may be something you want to look into.
But you have to be clear about, did you have insurance? Who did you get your insurance through? How many months were you covered? In 2014, because it was such a cluster word that rhymes with duck, the Congress, which actually is who wrote the law, allowed you to not have insurance for the first 3 months of the year. So you could have gotten your insurance as late as April and you would not pay a fine. Not so in 2015. If you're without insurance for 2 months or more, you're going to pay a fine. Also, if you did go through Obamacare, and this is for any insurance, whether it's Screen Actors Guild, privately purchased, or purchased through Covered California. If you did go through Covered California and you got assistance, to get assistance, you had to call your friends at the psychic hotline to figure out how much you were going to earn this year. And then tell that to Covered California. And if you earned more and you didn't call them immediately to say, hey, guess what? I just booked a $10,000 job. Give me less assistance. Who does that? Well, you're going to be over-subsidized, which means you're going to have to pay back that subsidy, and it'll feel like a fine. It's just paying back subsidy you didn't ultimately deserve. Nobody underestimates their income, but it would be wise to do it with Covered California.
This is a general question that we're gonna parse out a little bit. A gentleman asked, what point should we start tracking, deducting expenses? I assume that's now.
Day one.
Yes, if you haven't, that's now. So then let's use that as a continuing conversation of what are best ways to do that? What are examples of some maybe of your clients who they did a really good job of keeping track? Was it binders? Is it folders?
Well, we already covered a little bit of that. Getting the one credit card we both agree, is a great way to keep things organized. You can do the file folders, you can do, and there's apps that do it. You can hire somebody out.
I'm old school. I still like my 13 pocket file folder. And don't get the kind that has the narrow bottom. You want it to expand. And then go through and name each pocket. Okay, these are my medical expenses. These are my acting expenses. These are my...
Each category on whatever, I have a tax packet that I give my clients for them to fill out their information. Whatever categories is on your tax packet, make those your categories on your file folders or your internet folders or whatever.
Yeah, it'll take you probably 5 or 6 hours of sitting down with all of those receipts. But if it's going to get you $5,000 or $6,000 back, isn't that a good day's work?
Yeah, that's like $1,000 an hour that you just earned, right?
And if you don't have that packet, talk to an actor. They can find them online. They're easily.
I can give you a website. I'm sure Patty can give you a website. In fact, well, let's do this now. If you guys have questions that are specific and you want to approach Patty and I, and it might not be until tomorrow or the day after that you go, oh crap, why didn't I ask? I'm going to give you my contact info, and Patty will give you her contact info, so get ready to write. Jordana, Jordana, Capra, Capra. I work with Chuck Sloan, Sloan, and Associates. You can go to www.chucksloan.com and find our tax packet. The office number, I'm still seeing pens writing feverishly. The office number is 818-769 Oh, I'm about to give you Chuck's home phone, and wouldn't that be funny?
Don't do that.
Switch.
Switch gears. 7692. You go. I'll come back to this.
We'll leave it
brain is-
there. If you Google any of that, you'll
Yeah, if you go to our website, you'll find her.
So go for
Oh,
it,
no,
Pati.
don't call Chuck at home.
Yeah. Just find it on Google. You'll be able to find it. Yeah.
I'm aligned with a few different companies because I have different clients that fit into separate companies and entities that I'm aligned with. So my personal tax email is urtaxgal, your tax gal, @gmail. And it's Pati, 1 T, and Lauren. U as the letter U, and the letter R, tax, and then GAL. Like, I'm your tax gal. Gmail.
And if you Google their names, you'll be able to find all this information too. So that's easy now. So don't stress out if you didn't quite get it all.
I'm on Twitter.
A couple more things. You guys talked about paper, but is for people that are using computers, for example, I use an online calendar. Is that good? Do you recommend at the end of the year printing that? Does it, like, if you get an audit, should you print it off your calendar, or if you just keep it online? Is that still sticky, or are people still open to that?
You know where I'm going. Don't bring in your receipts. Don't bring in, I have people that bring in CVS bags full of receipts. Don't do that unless you want me to charge you hundreds of dollars an hour to do that, because I enjoy doing that and I love putting on some Netflix and like organizing receipts on my floor, but you can do it a lot less expensively yourself. So organize it yourself. Just bring in transfer your information to whichever tax packet that the person you go to wants to receive it in, and it's going to keep your taxes, your tax bill lower for us, for what we charge you.
91, yes, thank you. 2291. 818-769-2291. Not Chuck's home, Chuck's office. So, yes, I actually am a fan of going back and printing up the pages of your calendar. When I have, like sometimes if you go to Office Max, let's say, they'll ask, do you want your receipt emailed to you? Awesome. I always say both because, again, I'm, a receipt whore. So I have my paper receipt that I put in my folder, but then I also have my folder on my computer of tax-related deductions. And it's, it says taxes. So I drag that email into that folder. And if you can't do that, talk to somebody who knows computers, because I'm not coming to your house to teach you computer tech stuff.
I do alcohol.
This is a question you may or may not answer, but it's a UK-related question, so we'll see where we can go with this. Brian says, does a home property sold in the UK where it's not taxed incur tax if you are in the U.S. or live in the U.S.?
I think it has to do with residency, and in a situation like that, I would probably do a half-year residency so that he would get the best benefit while the property was sold.
Great, love it. Is there any other questions? Because I think we got one more. Perfect. Okay, one more, and then they're going to be around afterwards to answer your questions, because I know some people wrote down things like LLCs and stuff. We covered that at the top, and if you weren't here, watch the video, and you'll get those things covered. And then also, they said they'd stick around if you have any specific questions as well. So here's a Uber question, which I'm sure is you guys are getting more and more nowadays. Bought a used car for the side job for Uber. Can they deduct that? And if so, not as an actor, because it's a different job. And maybe that's even a broader question is, say you have part-time actor job, part-time masseuse, part-time other things. How do you keep track of all that to make sure you're getting proper deductions for each one?
Well, the mileage, of course, keep that separate because that's a separate job. The Uber income is issued to what's called a 1099K, which is kind of new to us. Mm-hmm. So, but it goes on your Schedule C as small business, and all of your expenses, your car washes, if you buy water and candy, you can do either actual expenses or business miles. It's usually always more beneficial to do business miles, and it's less work for us. So, whatever money you would have earned, we're going to charge you because it's going to take us a lot of extra time to do it. So, do business miles.
Unless you've leased the car, in which case your lease payments now become part of your actual expenses, so that's hugely beneficial, but you still have to keep track of your mileage, because here's an easy math example. If, as an actor, you drive, if you drive 1,000 miles a year, and 400 of those miles are pursuit of acting, auditions, agent meetings, and whatnot, 400 of those miles, what percentage of your total miles are business related? 40%.
Ding, 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 ding.
Okay, so you can deduct, let's say you've now leased your car, you can deduct 40% of your actual expenses. So we still need to know your miles. You still need to actually do that mileage. How many miles were total? How many were for business? How many were commuting? Driving to a paid job is commuting. It's not a deduction, but we have to put it into the tax return. And you have to have some left over for personal. So the client who sits at my desk and goes, God, I never go anywhere that's not for business. So you have all of your groceries delivered? You have your toilet paper delivered? Really? That's so awesome for you. You never go visit a friend? You never, ever? Okay, so obviously there's going to be some personal miles in there too, and there's medical miles and charity miles. So you've got to keep track of your miles, even if you want us to take that percentage of your actual expenses.
So we had a question here for the people who are like, oh, this is stuff I should have already been doing, like receipts and stuff. If they have it on a credit card statement, is that just as valid, or is it a little sticky in?
It's best to have both.
Here's the thing. If you have a receipt from Target that says filing cabinet, clearly that's a business deduction. But your credit card statement is just going to say Target. You could have been buying shoelaces and lip gloss. Not necessarily a business deduction. So keeping your actual receipts are ideal. If you did not keep them for this year, start today. But if you have not kept your actual receipts, then yes, go off your credit card statements and do the best you can this year. But believe me, you bring your credit card statements into an audit, and the auditor's going to go, you lose. Bye-bye.
Receipts faded. Have you guys ever run into that where they're like, oh, I kept my receipts, and oh, wait a minute.
It's best to do a digital. I'm not real computer. Do a digital scanning. That's what it's called.
There you go.
Thank you.
No problem. That's what I'm here for.
Scan them. Yeah, do that.
And like put as many on that flatbed glass thing as you can, and now you have a nice, clean, hard copy paper copy of your receipts that are not going to fade.
Thank you.
Thank
You ladies were
Welcome.
wonderful. Let's give them a hand and
This was
tell them how much you
fun.
appreciate
Thank
them.
you.
You guys like cranked that out in like an hour, and you guys just took care of
We
it.
could keep going.
I know.
seriously.
They're gonna be around. I'm sure you have more questions, specific questions. I'll answer what they can. But thank you for coming, and have a wonderful rest of your day. Thank you. Thank you.